Nvidia has become the first chipmaker to hit a $1 trillion valuation, leading to a surge of enthusiasm across Wall Street for companies seen to benefit from the latest developments in artificial intelligence. The elite club of US companies worth more than $1 trillion briefly had a new member, at least for a couple of hours. Chipmaker Nvidia briefly joined the ranks as its share price shot up more than 5% into the trillion market cap mark before retreating back down. Shares had already jumped more than 25% last week after the company forecast surging demand due to advances in artificial intelligence. Apple, Amazon, Alphabet, and Microsoft are the other publicly traded US firms worth more than $1 trillion. Founded in 1993, Nvidia was originally known for making the type of computer chips that processes graphics, particularly for computer games. The firm's affable co-founder Jensen Huang took a punt by investing in added functionality for Nvidia chips long before the AI revolution, a long game that now appears to have paid off. Its hardware underpins most AI applications today, with one report suggesting it has cornered 95% of the market for machine learning. ChatGPT, the chatbot that sparked AI fervor with its launch last year, was trained using 10,000 of Nvidia's graphics processing units clustered together in a supercomputer belonging to Microsoft. Over the past 12 months, Nvidia's share price has more than doubled as investors bet the company will profit as AI ushers in the next wave of tech advances. The California-based firm ended trading in New York on Tuesday worth more than $990 billion, after shares closed at about $401 a piece, or up nearly 3%. Analysts believe that Nvidia will be the heart and lungs of the AI revolution, and they expect the company to bring in $11 billion of sales in the 3 months to August, almost 50% more than analysts had previously predicted. Living up to the promise of its lofty valuation could, however, prove difficult. Though Nvidia boomed during the pandemic, its overall revenue growth was flat last year, while profits were cut in half. There are questions about whether Nvidia can keep up with the demand, especially as rivals AMD and Intel race to develop their own offerings and startups emerge. The firm also faces ethical issues, such as whether it should vet the AI products for which it produces chips, amid swirling concerns about the impact of AI on society. At current prices, Nvidia boasts a market value more than 8 times higher than that of Intel. That's despite Intel reporting more than $63 billion in revenue last year, compared with Nvidia's $27 billion revenue. The magnitude of the recent leap in Nvidia's share price was an astonishing surprise even to techno-optimists. Artificial intelligence is the next supercharged growth area, and we can expect this to be just the beginning. We know that growth will be there, but valuations can be hard to justify. Investor Cathie Wood, chief executive of ARK Invest, who is known as a tech booster, sold her stake in Nvidia in January, missing the gains made since then. She recently tweeted that the firm's shares were priced ahead of the curve. She said markets were making a mistake to think the company was the only AI player. In the past, investors have not hesitated to sour on former favorites. Facebook owner Meta, which joined the $1 trillion club in 2021, was booted out just a few months later as its shares lost roughly 3/4 of their value. It is now valued at around $670 billion. Communications giant Cisco was also seen as the likely $1 trillion club member during the dot-com tech bubble of the late 1990s, but that bubble burst and the firm is valued at about $200 billion today. It is not only microchips but the overall architecture for AI where Nvidia dominates as a solutions company. This has created a sense in the stock market of being the only game in town to play, at least in the short term. Proof is in the accumulated operating profit of more than $40 billion in the last 6 years, with an enviable client base serving virtually every major tech company. While the likes of Google's next generation Tensor chips could be competitive, it is not seen as likely to take share away from Nvidia. That risk appears to be presented by AMD and other hardware companies designing their own chips, like Tensor on Google phones. Everyone is in the pursuit of margin, and some operators could take a strategic long-term decision not to keep propping up Nvidia's enviable 30%. A search on Nvidia's chips sold in the UK shows a £500 to £5,000 range for retail products, although it's quite unclear what that looks like in trade. High-powered chips such as Nvidia's new H100 have become essential to building generative AI systems that are capable of creating text and images that closely resemble what humans can produce. Generative AI promises to unleash new kinds of productivity tools, but also threatens to shake up jobs in industries such as media and education. Nvidia has also stepped up into the ARM CPU market, which promises to bring huge leaps in power efficiency like Apple's line of M1 and M2 chips. This allows data centers to reap the benefit of lower power output whilst maximizing their scalability to provide the best processing for AI technologies. Artificial intelligence will surely be a key component to the future of humanity and to further computational discoveries. But with Nvidia's share price soaring, will the company continue to exceed expectations, or will investors lose confidence as a new player enters the scene, undercutting Nvidia with all they have? The future is always uncertain, and there's no telling if Nvidia will grow by 10,000% or become the next large company to fall into the shadows of the ever-evolving landscape.